Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, August 4th, 2023. Before we jump into the charts, as usual, just want to please encourage you to click like if you haven't already. Please share the content with friends and colleagues and become a Wicked Stocks YouTube channel subscriber. Also, please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week in 5 to 10 minute video format that you never see on YouTube, that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves at least on those individual picks. And we offer a 5-day free trial up front at the beginning of your subscription. So if you don't like what you see within 4 or 5 days, you can bow out at no cost to you whatsoever. So, daily Tesla report for Friday, August 4th. Let's jump to the charts. Just want to remind you that we've come off of channel resistance. That was considered a 2 to 3 month target about 2 to 3 months ago when we settled above the 182.63 channel top. We have tested this channel top at 293.49 quite a bit over the last month and a half, 2 months or so, and it is susceptible, Tesla itself, to falling back to channel support. On the daily chart, I can show you that that comes in at 205.58 now and climbing. Will, over the next couple of weeks, converge entirely with the 217.65 February 23 high. So the speed line at 245.50 that you see is sort of the pivot point inside of all that area. So this diagram, this chart really shows the 2 to 3 week time frame pretty well. In other words, you can bottom pick 245.50 over the 2 to 3 week time frame. It can contain selling through next week, and once tested, we can rally back to that 293.49 channel top within 2 to 3 weeks or so of testing 245.50. And inversely, closing below 245.50 shouldn't come as a great surprise. I'm not talking today, but I'm talking eventually, given the significance of this channel top. It's a longer term line study, and channel studies have a way of playing out where you test the channel top, the channel bottom sort of draws the market like a magnet, if you will, and maybe not that strong, but certainly in play, that low 200s over the next month or two. That becomes confirmed if we settle today, for instance, below 245.50. 245.50 is a pivot point inside of this wide area between 293.49 upside and 205.58 downside. It's about as simple as that. Now, for the day itself, I'll talk downside, intraday support at 249.57. You can see that over here in the far right. That can contain intraday weakness. This descending channel bottom, a week and a half in the making, has performed well, contained Wednesday's lows essentially, and we didn't test it on Thursday, but we came off of this area, 249.57, solid intraday support, but if we break 49.57, 45.50 is likely today, where once again, we can bottom out through next week. If you're an options trader, you could also consider buying 295 out of the money calls that don't expire for at least a month following a test of 245.50. Or if you're in no position whatsoever, you can buy 245.50 area. You can buy 246 even. I like to put my resting bids just above these important levels because I know full well I'm not the only one watching them. So I like to kind of lead it a little bit, not by a great degree, but 245, 60, 70, 80, somewhere in there would be my resting bid that I would then hold, assuming we don't then close below 245.50 into later August, anticipating 293.49. Now, the clear signal for me in terms of whether we will rally back to 293.49 would be a settlement today, for instance, above 268.75. And then I'm not anticipating really a test of 245.50. I'm more or less looking for a 1 to 2 week rally back to the 293.49 channel top, where once again, we can top out, on a monthly basis, and once tested, fall off again. We could climb this formation for months ahead. I've seen that many times. And of course, it would be a settlement at the end of a week above 293.49 by a 1% margin. This week's 1% is 296.42. That would then signal aggressive secondary buying that should, through the rest of the year, yield 414.49, that November 21 all-time high, but nowhere near to that scenario unfolding just yet. So once again, Intraday support, 249.57. We've got intraday resistance at 259.52. Now, we closed just below that. We certainly pushed above that on Thursday, backed off a bit. I still want to consider it our intraday pivot point, that, below which we can fall to 249.57. Possibly to 245.50 intraday. But if we push, especially if we open today, I think above 259.52, the 268.75 level is in reach today, is likely today, where we can place a daily high, and we could 268.75 is also, by a degree, a 3 to 5 day swing trade level. In other words, it would be a settlement above 268.75 that would indicate, aggressive gains into next week. In other words, 3 to 5 day swing traders should not be short if we close today above 268.75 and actually long, of course, anticipating the 293.49 channel top again within a week or two of closing above 268.75. But until then, we could fall off from here, 268.75, into early to middle part of next week. And from 268.75, yes, fall back to the 245.50 speed line. We could trade inside of 45.5 to 68.75 well into next week, perhaps, but I do want to keep it light at 268.75, closing above it. Expect meaningful gains in the next 1 to 2 weeks at 293.49. So, if we were to fall and close today, not only below the 249.57 level, but as I say, the 245.50 speed line, that speed line, what the point I'm really kind of driving home right now is the broader market. I've mentioned this before, the SPY. I could also put up an S&P 500 index chart, which I provide, obviously, with a Wicked Stock subscription. The SPY subscribers see this all the time. The point I'm making that we've essentially tested midterm resistance recently in the low 460s on the SPY. So the broader market, as defined by the S&P 500, susceptible to meaningful bearish rotation as we move into September trade. We don't have a sell signal at play just yet, but we're pretty close to setting one off in the SPY. I would invite you to become a wickedstocks.com member to check that out. But in terms of the Tesla analysis, I can also just say that closing below 245.50 is your sell signal for Tesla as we move into later August. This 205.58 formation rising daily, then expected within 2 to 3 weeks, where I might add we can bottom out through the rest of the year. And I guess the last thing I will say, because it is possible that we close below 245.50 today, if you're a 2 to 3 week swing trader, no good reason to be long this market if we close below 245.50. And if you're comfortable playing both sides of the market and you trade options, you may consider buying 210, 215 out of the money puts that don't expire for at least a month, because that would be the target, 205.58 and rising within 2 to 3 weeks of closing below 245.50. Until then, we can bottom out here as we move into later August. And as we test 245.50, as I said earlier, you might consider buying 295 or 300 out of the money calls that don't expire for at least a month. I'm going to leave it at that. I've said all there is to say for Friday's Tesla, except for please check out wickedstocks.com. I'll be back Sunday afternoon with Monday's Tesla, and you have a great weekend.